Ladies and gentlemen.
Good evening.
Are you ready?
Okay, here we go.
You're listening to the Deal Room Podcast. Join us as we bring you the inside scoop on business sales and acquisitions. Get across trends in the area and hear the industry's best recount their real-life tips, traps, and experiences. Now, here's your host, Joanna Oakey.
Hi, it's Joanna Oakey here and welcome back to the Deal Room Podcast, a podcast proudly brought to you by our commercial legal practice, Aspect Legal. Now, this week we are talking to our expert panel, Meena Wahi of Aspect SME Insurance and Angus and Joe, who are specialists in Transaction Liability Insurance. Now, we are today digging into a unique insurance product for sellers of businesses and shares in Australia. We also delve into what this insurance is, why it is so imperative to now consider in an M&A transaction, and how it works in practice. This is a must-listen episode if you are involved at all in business or share sales or acquisitions. So buckle in, here we go. Just wanted to say a massive thank you to coming along, Meena, Angus and Joe. I feel like we've got a great panel here for talking about this brand new insurance to Australia. So welcome along.
Thanks for inviting me, Joanna. Great to be here. Dialing all the way in from London, but hopefully your listeners will recognise the Australian accent.
That's right. You've covered that you're in London very well. We couldn't tell. We wouldn't be able to tell. Joe, you might be a different story. So maybe if we can kick it off, perhaps, Meena, maybe you and I could just kick it off with a quick discussion about why we find this insurance so interested in this type of insurance and why it's so relevant to the Australian market. And then I'll move over to you, Angus and Joe, to talk about what the product is and why it's new. But Meena, this is something that you and I have been investigating for a while. And I think, there's so many deals that I'm on where I can see the benefit in having some sort of protection for the seller and some sort of comfort for the seller in relation to the warranties that they're providing under a sale contract. And what's your, when we started talking about this, you had this great portfolio already of policies that you've been considering. What was your reasoning behind it?
A good question, Joanna. At Aspect SME Insurance, our endeavor is to help SMEs manage their risk. And post-COVID, though, some might say we are really not post, but post-COVID, I got a sense that the market was moving towards rationalization and SMEs were facing this sort of a shift in the market where there was going to be a lot of buying and selling. And in anticipation of the movement in the market, I went looking around to, what new products will come in. For example, with medical centers, for instance, I realized that telehealth risk would be big. But, you and I have been talking about market rationalization and buying and selling of businesses. And especially when you do the deal room, it's something that we have been speaking about for a very long time through Aspect Legal. And when I do my research, I always go to London, and they had a very good product in Transaction Liability. It had not featured, or perhaps it is a new product. So when I did more research, I thought this is great. Like, this is a great product for the SME market in Australia, because with buying and selling, buyers and sellers are obviously going to feel the need for extra protection through insurance, because the warranties and deeds represented through a sale contract can throw up scenarios where buyers and sellers don't see eye to eye, and there can be litigation, and litigation is very, very expensive. So I think it's a good product. Yeah,
absolutely. And this is a great fear for many sellers, I find, this concept of the risk that continues post-completion. So, they feel like they want to sell their business, head off into the sunset, clutching their bags of cash, and feel concerned that, they're not going to be able to sleep easy until, the warranty periods have expired, so that they, no longer have to be concerned about the risk that follows them. So this is where I'd like to throw to you, Angus and Joe. Maybe can we talk about this product that you have available, which is new to Australia now, and I believe more broadly than that, a fairly new product for SMEs globally.
That's absolutely right. So we launched the product known as Transaction Liability Private Enterprise last year, and we've had a huge response, in particular in the US. We've already bound policies in the Australian market, and we came to this problem with a real SME kind of background. We started off life as a underwriter about 20 years ago, focused on SME cyber insurance, and have really built out a specialty business from there. And one of the unanswered questions when it came to transaction liability, for which we're one of the top 5 underwriters globally, is there was nothing for SME. And you picked up on it earlier, Joanna. You said, there's a real fear amongst sellers when they sell their business that something is going to come out of the woodwork and attack the consideration, and often, they're fund for retirement, and have to return some of those proceeds to the buyer because of there being a warranty breach. And so we thought, there is a product out there for much bigger deals, but not for SME. So how do we solve that? And we came up with Transaction Liability Private Enterprise. And we knew that there were a variety of things that we had to achieve with it. And I think we've done it. So it's got to be really compelling from a cost standpoint. It's got to be really quick to underwrite, and it's got to be really easy to secure coverage for. So the underwriting process is very streamlined, application-based. There's only about 10, 15 questions that we ask, very straightforward. And we can put a policy in place in a shorter time frame as 12 hours, subject to getting all the materials that we need. So, that's the kind of core part of it. And there's all sorts of other benefits that I don't know if you'd be interested in sort of discussing more detail, but I'll just touch on one of them. And that is, W&I insurance, which is really what we're talking about. Transaction Liability Private Enterprise is the product, the class is W&I insurance. The W&I insurance, it's not just there to transfer risk. It's there to facilitate deals. It helps people get deals done quicker and more easily than had they not had insurance. And that's certainly one of the things that we see as being a benefit, especially for business brokers, advisors, not just sellers.
Absolutely. I think you're spot on right there, because, I talk to business brokers, corporate advisors, accountants, advisors to buyers and sellers who are knee deep in these transactions on a daily basis. And, there's this constant concern that when you get into the contract phase, there's all of these issues that arise from when the seller, starts to understand the warranties that they're providing and starts to understand that there will be risk potentially post-transaction or post-completion. And, I think for advisors to be able to have a tool like this that they can turn to be able to then find a way that the parties can get through these negotiations really provides a great opportunity. And as you say, that hasn't been available in the SME market. So whilst it's been available in larger transaction sizes, it's the SME market that makes it particularly novel. And I guess it's nice to consider that it's not a novel product per se. The concept of insurance in this area for larger businesses has been around for a long time. It's the application to SMEs and the ability to make it easier and more cost effective for SMEs to access this type of insurance that I think is the real novel element, building upon a base of something that has a history of its application in the past for other types of businesses.
Absolutely. I mean, it might be interesting to know that Australia is actually one of the most advanced warranty and indemnity insurance markets globally, adopting the product for pretty much all private equity buyout M&A above, I think it's something like 50, 60 million bucks. So, it's the way M&A is done in Australia for bigger deals. And I think now with private enterprise, we've got a product which we hope will change the way SME M&A is done for the Australian market or indeed the global market. And, you touched on a couple other points which are probably worth bearing out. So, yes, I mean, a seller is usually personally liable for the warranties they give. Now, where it becomes fairly punitive for the seller is if the seller has to give an escrow. They have to put some money from the consideration aside into a separate account that they don't control, which would fund any damages resulting from a breach of warranty or other contractual breaches. That locks up that cash. They can't get it. Now, with insurance, we've seen, especially in the United States, which is quite similar in terms of risk appetite for SME, we've seen that sellers can avoid the need for an escrow by taking out a private enterprise policy and telling the buyer, look, I've got this insurance policy. There's therefore covenant strength behind the warranties that I'm giving you. Therefore, I don't need an escrow, or an escrow's cousin being the holdback, which is where the buyer withholds a certain amount of the purchase price for a certain amount of time, subject to there being no warranty breaches. Similar outcome, which is a bad outcome for the seller. They want to avoid that, and here's a potential solution for them to do so.
Brilliant. It's such a great idea. And so then if we can talk about a few areas of specifics. You talked about it being quick and easy. So we talked about quick. Can, you said, be as short as 12 hours to place a policy. Is that right?
Yeah. I mean, all we need is the application, which is 15 questions or thereabouts. Very straightforward. We need, if there's a virtual data room, we just need the index of that. We don't need access to the data room, just the index of all the documents that are populated on it, and the agreement that people are wanting to enter into. And that's it. And it might be that we have a couple of follow-up questions. That's pretty rare, in all honesty. So application, VDR index, and the agreement, we can quote it within a couple of hours, and we can put a policy in place pretty soon after that.
And what I find interesting is that you don't necessarily even want to get involved in directing the types of warranties that are given. Maybe if you can talk about that a little bit more, and the extent to which the terms of the sale contract will have any impact on the policy? Yeah,
so it's a good question. And I think it's worth kind of contrasting it with the main market, the bigger deals. On the bigger deals, underwriters are very focused on the exact drafting of the warranties. We're not. What we're really interested in is finding out what's the likely knowledge of the insured individual that we're insuring under the policy. What do they know about the business? What was their role? How long have they been involved? And we are relying on, SME businesses are, broadly speaking, more simple than much bigger multinational businesses. So we'd expect that in the SME context, the owner-manager will have more day-to-day involvement, and therefore their knowledge is relevant for the warranties they're giving and the disclosures they will inevitably make under the terms of the purchase agreement to the buyer. That's the underwriting. We're not hugely interested in the exact drafting of the warranties because it's not massively relevant. There's only so many ways you can say the same thing. Or, Johnny, you might tell me otherwise.
There are actually quite a few ways we can say it, but
well, exactly.
We're lawyers. We like to find lots of ways to throw words in.
Exactly. But the essence of it kind of gets the same result. And that's what we've concluded. And so in terms of pricing, okay, the sector will influence the pricing to an extent, and the amount of limit that is bought relative to the total enterprise value of the business being sold is relevant. But as I said, we come back to those three key points that we've tried to have baked into this product design, and that is speed, price, and ease. If we don't achieve all three, I don't think we've really got a product that will be attractive to SME.
Absolutely. And so let's talk about price. Then you talked about price. Can you give sort of some indication to our listeners approximately what the pricing would look like?
Sure. So what we'd recommend in terms of limit, and limit will often be the most influential factor for price. Okay, so we would generally recommend that you buy as much limit as the cap on the indemnity that you're giving under the agreement. So let's use some numbers here. let's say you're selling a business for $10 million and you've got a indemnity cap of $10 million. Well, you should buy $10 million of insurance because that way you are fully protected against the entire indemnity that you're giving. Now, let's take a recruitment business. It's a hot jobs market. I'm sure there's going to be a lot of recruitment businesses wanting to buy SME recruiters because they're doing niche business. Taking that example, $10 million enterprise value, they're buying $10 million of limit. I'd be surprised if we can't get that done for anywhere between 50 and 80,000 Aussie dollars for $10 million of limit. You can buy less, and obviously the price would go down on that basis. And the other thing to bear in mind is that includes the brokerage that we would pay to an insurance broker to place the policy. So that's all included. And there is no underwriting fee, which might be an unusual thing to say in the context of commercial SME insurance. I only say it because that's an expected cost in the main W&I market. You have to pay for the premium and you have to pay an underwriting fee to secure a W&I insurance on those bigger deals. We don't have that on the SME transaction liability private enterprise product, which again, I think greatly assists the overall economics of the product.
And so one of the things that we haven't talked about is that this is a sell-side insurance policy. So this is for sellers. Let's talk about that first. So it's for sellers. Why is it for sellers, not for buyers?
So I think the key reason is that it comes back to the point of knowledge and trying to adhere to those three principles: speed, price, ease. If we're insuring the buyer, then we have to try and figure out as underwriters, what's the buyer done? What does the buyer know? And what diligence have they done? And then try and reconcile all of that back to the warranties that they're negotiating. Because the buyer, it's buying a business subject to what the seller's telling them. And so, the outcome of all that is it's a far more involved, long and expensive process. Now, we can do that, but you don't get the benefits that we're trying to achieve of speed, price, and ease. So sell side, we're capturing that knowledge. The seller's involved in the business. That's really what we're focused on. And that allows us to put those policies in place so quickly with a really efficient underwriting process.
And I wanted to point out that it was sell side, for that educational component for our listeners. But on the flip side, obviously there is a benefit to buyers in the sellers in their deal, sitting across the other side of the table from taking out this insurance. It makes negotiation easier. It makes the sellers less nervous. Quite often we find sellers can hit this point where they suddenly realize they're selling their business baby and they're having all sorts of issues going on that might create a bit of a barrier to the transaction anyway. When you add the concern about risk of warranties in there, suddenly you have the risks of deals falling over, and I've certainly seen that quite a few times in the past. So from a buyer's perspective, I think, and I'd be interested in your take on this, but my personal perception is that there's a lot of benefit for buyers in the sellers on the other side of the table taking out this insurance. Do you have any thoughts on all of that?
Yeah, absolutely. So it's multifaceted. As a buyer, what are you concerned about? There's no point getting warranties in the first place if you don't have any confidence that there's financial strength sitting behind them to actually pay a warranty breach. And now if you're dealing with a seller without an escrow, let's say, they're probably going to be dispersing that consideration into a entity or an individual which is outside of the net in which they can claim recourse against. With an insurance policy, that there is a covenant strength or a backstop that sits behind the warranties because the seller is indemnified themselves by an insurance company, which obviously has financial rating and all the other things that go with that. So it improves confidence in your ability to rely on the warranties being given by the seller. That's from the buyer's perspective. You can save on the negotiation time and cost because what you could do is you could say, here are the warranties that we'd like. Maybe the buyer wants to fund the premium themselves for the seller. And they say, we're going to buy you an insurance policy. You are protected. And here are the warranties that we'd like. Please disclose against them. But let's cut out and apologies, John, if this means you have to do less work on an M&A deal, but it should be a deal far quicker because the negotiation is far more simple.
Oh, look, and that's why I love the idea of this sort of policy, because, we're all about making transactions easier. We don't want to create more work for ourselves. We want transactions to speed through and everyone to be happy at the end of the day. And I just think this is such a great way to get over some of the road humps that appear along the way in a deal. Maybe can we talk about some stories? I'd love to hear maybe any stories that you've had where you've placed this sort of policy in a transaction that maybe you've been having difficulties without the policy. What does that look like? Maybe if you can give us some idea of, your on-the-ground knowledge of how it actually works.
Yeah, I mean, I guess the first point I'd make is, just how diverse the SME market is in terms of sectors, types of deals, types of investments getting made. First and foremost, we created this product for the classic conception of SME. So you've got a business person that's selling a fencing business, which we've insured before in the US, as an example. They hadn't heard of this product, and in fact, the reason why this was attractive to the sellers in that regard was the seller said to their insurance broker, well, why don't I just buy D&O runoff, in the belief that D&O runoff insurance would protect them against a breach of warranty under the agreement. It's not the case, because D&O as the standard has a contractual liability exclusion, which means D&O runoff serves no cover for the warranties that you're giving by way of a purchase agreement. So that was the kind of cause that got them interested in private enterprise in that context. We've had other scenarios. So we've done a software asset deal, and perhaps this is kind of more unique to the US than it is elsewhere. But Silicon Valley deal, it was a software asset getting sold out of a business that hadn't really succeeded, but the software asset itself was still valuable. They wanted to sell the asset. The buyer wanted some protections against the fact that the IP that led into this software was actually owned by the seller, and that they could transfer that IP along with the asset that they were selling. So that was another example where we got a deal done, period. It wouldn't have happened unless there was insurance in place, because without it, the buyer just never would have got comfortable, because the seller wasn't going to be giving reps or warranties as it would be for Australia in respect to that asset, because the business had ultimately failed. Some other examples, we've had your classic kind of fast casual restaurant chain, as it's become known, like your Zambreros, let's say in Sydney, or your Mad Mex, that kind of fast casual chain in Southwest US, where the seller didn't want to give an escrow and the buyer accepted the insurance as a replacement of the escrow. So that wasn't just a benefit for the seller in facilitating a deal, but it was a real economic benefit, because if you have a portion of the proceeds tied up in an escrow, that's costing you money. There's an opportunity cost to that. That opportunity cost in that instance was actually greater than the cost of insurance. So they had more protection in terms of how much limit they bought and the size of the indemnity. So the buyer was happy, the seller was protected, and it was actually saving them money because they didn't have to buy the escrow or pay for the escrow. So there are just some examples of how it's used. And I would say this, that insurance is typically thought about as a risk transfer kind of policy or risk transfer instrument. And what I mean by that is, you buy property insurance to protect against your house burning down, but you don't expect your house to burn down. But if it did, you're covered. Great. Transaction liability private enterprise protects you against the house burning down by analogy. But it's also a really great deal facilitator. And I touched on this earlier, but if you use it strategically in a way that is going to save you time on negotiating the warranties, you're going to be able to get a deal done quicker, and you're going to get a buyer to pay you more because they've got more warranty protection. Well, you're so far ahead of what you would be absent insurance.
Absolutely. And we have a lot of business brokers and advisors who listen to this podcast. And it just, this seeding some ideas here, the things that I'm thinking about are, if you bake this into a deal, so you have your sellers starting out in the negotiation of the commercial terms, thinking about being able to use this type of insurance. And then the buyer comes on board, having priced the deal with this understanding that the transaction could be quicker, smoother, and give them more protection at the end of the day for the asset they've purchased, because the warranties will be more robust than they would have been otherwise. I can see how this could really facilitate a great discussion point right in the beginning. And I guess timing is quite important here. Although, as you said, we can place the deals very quickly. So there we go.
And not only that, but there are three kind of points of purchase. You can engage with the process before you sign a deal. You can sign a deal, and in between signing and completion of the transaction, you can then secure insurance. And you can even secure insurance after the transaction completes, if you wish. Although I would really recommend that insurance is bought, or at least you start the process pre-signing, because that's where you get that deal facilitation benefit that we've spoken about.
Yeah, absolutely. And I just wanted to talk about the deal sizes that this relates to. And I just want to bust the myth that might be out there for some of our listeners listening in, thinking that this might only be for the 10 million plus deal size. What sort of sales sizes can we be looking at where we can utilize this type of insurance?
Yeah, I mean, it's a good question. And we definitely cater for the S in SME, so we can go down to 250,000, even less. I mean,
wow.
The range is sort of, we say 250, and for the Aussie market, it's up to circa 30 mil in enterprise value. These aren't absolute hard numbers. There's flex there. We're not going to say no if it's a great deal to insure if the deal is, say, 200,000 Aussie. But, I think everyone will admit that for a deal of that size, it probably wouldn't really be a common deal in the business broker network. But look, we're open to it. And if there's deals out there that are that size, then we'd absolutely consider it.
Brilliant. Okay. Well, look, I think we've covered it all. What a great product. I think that this is something that will get a lot of traction here in Australia. I'm really excited. I love innovative new things, and I really super love any sort of tool that we can use to make transactions easier, quicker, and smoother to get through the whole process. So, look, I just want to say a massive thank you to all three of you for coming along. Any parting words?
Thanks so much for inviting us on. And I think, we're just so excited to kind of have a product for SME, which takes us back to CFC's roots. And Australia is one of the only 5 markets that we're offering this product in. And it is the only sell-side SME M&A product available anywhere. So for the business brokers out there, lawyers focused on SME transactions, please feel free to get in touch with you or with us, and would gladly have a conversation, because we're making a market here and we want it to be really relevant to Aussie SMEs, and we can only do that by starting that conversation. So hopefully we get a flurry of emails and start the discussion.
Brilliant. And Joe, was there any parting words from your side?
Well, I was just going to say really that Gus has done a brilliant job in explaining the product. But I've kind of been on the ground with Gus kind of since the inception of the product. And I'd really just echo what he said in terms of how quick this product is to put in place, how easy it is, and how cheap it is kind of compared to standard W&I. We've already placed dozens of these policies now across quite a few jurisdictions. And we're also in the process of building out the team specifically for this product. We've got 2 specific underwriters for the product, with 1 to come as well. And Gus is obviously heading up the team as well.
Brilliant. Wonderful. Okay, great. Thanks, Joe. And Meena, any last parting words from you?
I can only say, Joanna, that it's we have a great product, and the satisfaction that comes with serving your clients and anticipating their needs and providing them the right product at the right price. That's what it's all about. So I think we've lined up all the key elements of having a product that's going to be of great value to clients. And that's what it's all about. Absolutely.
Absolutely it is. Well, look, thank you, all three of you, for coming along. We'll put details in our show notes of how you can contact Meena at Aspect SME Insurance. If you're interested in finding out more about this, whether or not you're a seller or an advisor for buyers and sellers in this market. Well, that's it for this episode, all about transaction liability insurance. I hope you enjoyed our podcast today with our amazing expert panel as we dug into this innovative new insurance product in the SME M&A space. Now, if you're interested in finding out more about this product, we have a webinar coming up very soon. Now, you'll find the details for that in the show notes. And if you miss the webinar for this, because you're listening to this podcast at some point in the future after the webinar has been held, then have no fear. We will have a replay available for you as well. And you'll once again find those details in the show notes. And if you'd like to talk to Meena about getting some of that insurance in place or understanding the relevance of how you can get insurance in place in your deals, then just check out our show notes as well, and we will link straight through to Meena where you can set up a discussion and get started with some of the benefits of this insurance in your deals. Well, that's it. I hope you enjoyed what you heard today. If you did, please subscribe to the Deal Room podcast on iTunes or on your favourite podcast player to get notifications straight to your phone whenever a new episode is out. We'd also love to hear your feedback, so please leave us a review and rating if you're already one of our subscribers, or even if you're listening to this podcast for the first time. Well, thanks again for listening in. This has been Joanna Oakey and the Deal Room Podcast, a podcast proudly brought to you by our commercial legal practice, Aspect Legal. See you next time. Involved in business or share acquisitions or divestments? Want to know how a brand new insurance policy available in Australia right now can help move deals through quicker and smoother and minimise risks for sellers post-sale? Well, if so, contact us at info@aspectinsurance.com.au.
Ladies and gentlemen.
That will conclude this evening's entertainment. Thanks for listening to the Deal Room Podcast. To find out more about this episode and other episodes in the series, check out the show notes or head over to our website at thedealroompodcast.com.au.